A wise man once said that don't do your best, do whatever it takes. Malkansview is India's leading training institute on stock trading with programs on short-term trading, momentum trading, options trading for income generation and wealth creation. Malkansview was formed in 2008 by Vishal and Meghna Malkan. Vishal, who started trading at 16, committed various blunders to finally taste success with the market crash of 2008. Meghna migrated from law background into stock markets to become a full-time trader and trading coach. For over 10 years, they have helped more than 40,000 people to discover their true potential. Malkansview believes in continuous education, which has led them to learn from the world's top trainers, coaches, and facilitators. It has conducted more than 200 live events, nationally as well as internationally, with only one purpose: to provide premium education and empower people to take control of their financial future. Vishal and Meghna regularly appear on India's leading television business channels as well as print media. They have received various recognitions for their contribution to financial markets. Their core pillars of success are: keep it simple, make it systematic, and do whatever it takes. They have opened the door to financial success through their live events, online programs, and coaching programs. They guide you through their tried and tested evergreen trading principles, which are so simplified that even a 10-year-old can do it.
First I didn't do it, then when I came here, then I got like, I want to do trading.
They believe that they have never really truly reached their destination. There is always another level to strive for. Malkansview, changing the way India trades.
Hello and welcome. You're watching Money Control. I'm Sakshi Batra and this is a special webinar on RSI, the 5-star trading strategy. And to share insights on this, we have with us today Vishal B Malkan, founder of Malkansview. Thanks a lot, Vishal. Appreciate you joining in on Money Control. But Vishal, before you begin, I'll just take a minute to introduce you to all our Money Control viewers. Well, Vishal is the co-founder of Malkansview Training Institute Private Limited. He is a master trainer in the areas of technical analysis, trading psychology, and personal motivation. Now, having been a trader since the age of 16 years, Vishal has been through all the thick and thins of the stock market until he finally achieved success as a trader. Since then, he has taken up the cause of helping others to become professional traders as well. And today, in this webinar, he is going to share with us insights on market analysis techniques that traders and investors can make use of in the current volatile times. Well, with that, it's over to you, Vishal. I'm sure all our viewers are waiting to discover the next money makers with your techniques, even in these uncertain times.
Hey guys, this is Vishal and thank you for joining this exclusive webinar on Fiestar Strategy using RSI. Now, to tell you a brief about myself, that I'm born and brought up in Mumbai and joined stock market at a very early age of 16 as soon as I was out of school, and I joined stock market, and it was a long journey for me to doing all the blunders and mistakes and all the money lost till I found some success in the market crash of 2008. Yes, you heard it right. 2008 was my turning point when I got some big breakthrough in my analysis, and I was able to break the crash just before the market crash, and that was a turning point. And that's when I thought that it took me like 12 years to understand the market, to learn the technical fundamentals and everything. And then I started this training institute called Malkansview, and it's been a long journey now. Let's get started with RSI, Relative Index Strength Index, which is a very, very simple and popular tool now with technical traders. But in my journey of last almost now 25 years of trading, 13 years of training, I understand that going broader on many topics, like when I started my career, I used to learn RSI, ADX, Bollinger Band, Candlestick, CCI, JTI, Elliott Wave, GAN analysis. All these things just looks good and looks stimulating, looks complicated, but it doesn't make money. till I learned this lesson from one legendary trader called Larry Williams. And he said that whatever tool you want to choose any one and go deeper into it. Don't go broad, go deep into this. And then I decided I'll go deep in RSI. And that's my journey since last 13 to 14 years. I've been studying RSI, and I came across unconventional RSI. What is unconventional RSI? Now, if you are being following technicals and if you're following RSI, you must be knowing about overbought, oversold. You must be knowing about the 70-30 levels. You must be knowing about the divergences, bullish divergence, bearish divergence. But this is the conventional approach. This is normal. That's where most books and most videos are about. But then there's an unconventional approach, which is slightly different. And that's exactly what we are going to talk about right now. And that has become the USP of our training institute. Now you can, once you know the concept which I'm going to teach you, I can guarantee that after this session, the way you look at the charts will completely change for the rest of your life. Just another 40-45 minutes and you are going to learn one of the most powerful strategies in terms of RSI and momentum, right? So let's get started with the unconventional approach called RSI Range Shift. Now, if you understand the conventional, everybody talks about 70 as overbought and 630 as oversold. That's a standard. But the unconventional approach says that markets behave differently in a bullish trend and in a bearish trend. So their behaviors are different. So you can't use standard 70-30 for your overbought, oversold. So when the markets are bullish, you're going to follow a range 40-80, 40 and 80. And if your markets are in the bearish zone, they are following the range 60-20. So they are different like this. They are not same like this. They are different. So that will clearly define what the range of the market is. Now let me show you a couple of charts. This is a bullish range. If you see the blue arrow, the lines which are there is 40 and 60. So it's taking support on 40 and going all the way to 80. And when the red arrow in the downtrend, it's taking resistance around 60, 65 and going all the way to 20. So that's a bullish range and there's a bearish range. And once we have range, we can even call it have a range shift. Means how the trends are changing from a bullish trend to a bearish trend. That's very clear definition. Now look at here, the point A. Now look at the red arrow which says that the downtrend is on below 40. And then we have point A where there is a range shift. What is it saying? That now I'm not going below 40. If the market is not going below 40 RSI, that means it is now no more bearish. It is shifting to the bullish range because bullish is 40-80. So if it does not go below 40, like point A and point B, that's where you can even think about buying. You can think about getting out of your shorts. Now, if you look at this, again, a bullish range shift going above 40 and taking support. So if you see the low at point A is almost very close to the final low. So that's where you are having a very low risk entry because the range is shifting from bearish to bullish. In a bullish market, the RSI will not go below 40. And in a bearish market, RSI will not go above 60, sometimes 61, 62. So that clearly defines the trend. So if you have to call bullish, bearish and sideways, what will be the common area between bullish and bearish? Is 40-60. So when they are into 46. Now this is very interesting. Look at the monthly chart and look at the number of points, 1 to 15. 1, bearish. 2, not bullish. Sorry, not bearish because it's taking support. 2, 3, 4 is sideways. 5. Now 5 is going above 60 and taking support on 60. That is extremely bullish. 5, 6 and 7. Even 9. Now look at the point 10. It says range shift. Now I'm no more bullish. I want to go down. So 10, 11, 12, 13. 10, 11, 12 is sideways. 13 is extremely bearish because it's not even going above 40. So now we have defined the range between above 60, between 40, 60 and below 40, right? Look at this point A, range shift. So up arrow, blue, then A onwards sideways, and after that it breaks 40, it goes into downtrend. So what it will do is the unconventional approach we are talking about right now, the range shift, will clearly define the trends. And we will get rid of that overbought, oversold concept, which actually is I think completely misunderstood, because I have seen then 70 RSI, which is called as overbought generally. From there, stock has gone 3 times and RSI touches 90. And if you don't have that knowledge about RSI, you would have exited at 70 RSI, or maybe you would have shorted that, and that would be a big blunder, right? So in technical analysis, half knowledge is going to be more dangerous, right? So let's go deeper into this, and that's what I'm trying to help you with this. And then we'll come to a 5-star strategy after you understand the concept of range shift. So as I'm showing you charts, the same range shift thing will be applicable to a daily chart, a weekly chart, a monthly chart, a 5-minute chart, or a 15-minute chart, or a half an hour chart, 60-minute chart, everything. It will be applicable to equity, commodity, currency, Bitcoin, cryptocurrency, everything. So that's a universal application. Now look at this, point 1 to 2 sideways, which is your extremely bullish. There is normal bullish and there is extremely bullish. Extremely bullish will be 3, 4. Then look at this 5, 6, 7, 8 sideways, 9 also sideways, 10 extremely bullish. Then you have 11, 12 as sideways, and 13 extremely bearish because it goes below 40. And look at the price behavior vis-a-vis the numbers. It's so evident, becomes very, very easy. Now, if I have to buy, just you can pause this video and see where is the best buying point in this. The best buying point in this is point number 9. Look at the last one, because it's taking support on 60, which is the best short here, which is point number 2. Where? Because it is taking resistance at the 40 levels. Sideways market, 3, 4, 5. That's sideways market, right? Very, very simple. Again, look at the best buying point here. Point number 7 and 8. 7 is crossing 60. 8 is taking support on 60. So it says, I don't even want to go into bearish territory. When you don't go below 60, you are not going into bearish territory. Bearish territory is 60-20. And we are not going above 40, which is 0.4. That means you are not even touching the bullish territory, which is 40-80. So that's where you completely changes your life, completely changes the way you look at markets. This range, you can go on and on. I can show you hundreds of examples. It's actually your job now to practice. Nowadays, so many charting platforms are free. You can go to our website and see the charts like investing.com. Now here, the best buying point, 5 and 10. And the best selling point is number 2. Otherwise, most of them are sideways. Again, best buying point here, 9 and 10, 5 and 6, even 7. Look at that. 5 is 60 support, 6 60 support, 7 60 support, 9 crossing 60, and 10 60 support. Best selling point, number 1, below 40. Right? Now, irrespective, this is a monthly chart of Bale. And it's a log scale chart. Look at the clear definition of trend. 1, 2, 2 is bullish, 3 is sideways, 3, 4, 5, 6, 7. 7 is bullish, 8 is extremely bullish, 9 is extremely bullish, 10 goes sideways. So any chart you follow, this is a silver chart, it's the same thing. MRF monthly chart. Look at the trend. You wish you had MRF in your portfolio. And if you're a long-term investor and look at the monthly chart, you look at the support. It started in 2012 when it was around 5-10,000, between 5 and 7,000. That's where you cross 60 on number 0.6. 7 you took support, that could be your buying opportunity. 8 you took support, you could be bought there. 10 again around 15,000. 11 again around 30,000, and rest is history. So it can be applied to any damn thing which is there, any charts. Do your practice, do the same practice as I'm showing you. Put up a chart, put RSI, put these lines as 40-60, because most softwares or most websites are going to give you by default 70-30 because that's the conventional approach. But you need to change it to 40-60. You only need RSI value. There are some people who use moving averages and all those things above RSI and all that. It will complicate. Just RSI 40-60. Then you just do the analysis, mark the points where it is taking support, resistance, and then see whether the trends are changing from there or not. Right? Look at this, 8 cross 60, 9, 10, and 11. Look at the trend here between 8, 9, 10, and 11. And look at the trend between 12, 13, 14, 15, 16. Look at this one. So that's so simple, right? Range shift. Now this is your like what we call as thumb rule or guru mantra, that you can copy this, take a snapshot, and check any stock in the world on any time frame on this thing. Uptrend is 40-80. A strong uptrend, which I said extremely bullish, is 60-80. Downtrend is 60-20. Strong downtrend is 40-20. And the sideways market is 40-60. Right? So this is so very, very simple. And I suggest, because if you are new to this, you may watch this video a couple of times and then get going on the charts. Now, we are going to talk about Fiestar Strategy. This is something very, very different, very, very simple, something which I discovered like almost 9 years back. And then since then, I've been teaching this in my programs, online programs nowadays. We have stock trading secrets, blueprint. We actually trade options based on RSI, options secret, options mastery, and the unique, our flagship program, Trader in Me. It's a 1-year program to make you a full-time trader or to generate consistent return from the market, right from the zero level. So you may check out those details on the website, but let's get started with this simple strategy, which you can apply to all the stocks and all the instruments. Fiestar Strategy is going to be a long. How do you go long on this? Now, I have this unique way of calling this. There are 3 charts, monthly, weekly, and daily, which is called as the long term, medium term, and short term. And I would call it as grandfather, which is monthly, father, which is weekly, and son, which is daily. Now, if you understand technical analysis, one of the thumb rules of technical analysis is higher time frame rules. So what is a higher time frame? These lines which are drawn, the parallel lines, are 40-60. So monthly RSI above 60 means what? It's a strong uptrend on the long term. And weekly RSI above 60 means what? It's a strong uptrend on the medium term. And daily is near 40 support. So it's like grandfather is bullish, father is bullish, and son is at the last point where if it goes below 40, it will be bearish. So as a general rule, grandfather and father will not allow the son to go below 40 and pull them up, right? In isolation, the daily chart doesn't matter. But because the grandfather, father, which is monthly and weekly, are bullish, the sun will have a turning. And that turning point at 40 support is going to be called as inflection point, right? Let me explain you to the example of waves. If you understand waves, if you go to the ocean and there are big waves and small waves. So the big waves are going like this and the small waves are going like this. Who's going to win? The big wave will merge and push the small wave in the same direction, right? So this is the biggest wave, this is bigger wave, and there's a smaller wave. If these two are going up, they will pull and they are meeting at an inflection point, and that will push the market up. Now this is representation of RSI on 3 time frames. So where is our buy point? It's going to be on daily chart, right? So how does a daily chart look like on the candlestick chart? So because it is going down, if you see this is going down, and there'll be a turning point, the candlesticks will look like this, the chart representation down, and then we have a green candle. That means father and grandfather are doing the job of pulling the sun up, right? That's inflection point. As soon as we see a green candle, it can be a small candle, big candle. Above the green candle is your buy. Below the low of that green candle is your stop loss. That's simple. So 1 candle stop loss. Now once it turns from 40, where it can go up to minimum is up to 60, right? So the rules are monthly above 60, weekly above 60, daily near 40, entry above the signal candle. The green candle is called the signal candle. Stop loss is the low of that swing. Sometimes the low of the red can be lower or the green can be lower. Whichever is the lowest is your stop loss, because if it goes below that, then the RSI goes below 40, and then the whole purpose is defeated, and the sun didn't listen to grandfather, father, and it went into the bearish territory, right? So the whole setup is destroyed. So we have to take a stop loss and get out. Now, when I say 5-star strategy, first of all, nowadays we are living in the world where everybody is rated, including your Ola, Uber, Zomato, Swiggy. Everybody gets rated on different parameters. So how do you rate the trades? There are 2 ways to rate the trades. So one is you use one chart, which is, let's say, daily chart. And on that you put candlestick, RSI, Bollinger Bands, volume, trend lines, Fibonacci. So one chart, multiple tools. And the more there is a support also, there is a candlestick pattern also, there is RSI also, there is a Bollinger Band also, and also there is a right time trend changing date also. that becomes a 5-star trade. The more number of tools confirming, it becomes 5-star, 7-star. It's only candlestick and nothing else, then it becomes 3-star. So that's one way of rating, using one chart and multiple tools. And the other way of rating is using one tool and multiple charts. So what we are doing is that one is we are using only RSI. We are not looking at trend lines, moving averages, or Fibonacci supports or Bollinger Bands. We are looking at RSI on multiple charts: monthly chart, weekly chart, daily chart. If all three are in tandem, it becomes a 5-star stock. Let's say in this case, the example which I'm explaining right now, monthly is not supporting, monthly is not above 60, it's just between 40, 60 sideways. Only weekly is above. So this 5-star will become 4-star. That's simple it is, right? So start rating your trades. Whatever parameter or tools you are using, you may not be using RSI at all. You may be using MACD. So based on MACD, you can rate them. And so accordingly, you can drive your car. It's like you are driving the car as per the road. Sometimes you have to drive in 2nd gear and 4th gear or 6th gear. Depends on the road. So depending on the star rating, 3-star, I will trade 2 lots. 5-star, I'll trade 4 lots. 7-star, I may trade 6 lots, right? That's because when the rating goes high, the probability of making money also goes high, right? And that's why you can take a slightly bigger risk than a 3-star trade. Do you understand? That's how simple it is. Start rating your trades. That's my strong suggestion as a trading coach. First target for you is going to be RSI 60, right? Because that's where it's going to touch first. And if it crosses 60, there could be multiple targets. Can use 3 to 5 bar trailing stop loss. This, what is trailing stop loss? I explain you with the chart. Now let's see a demonstration here. If you see this, the monthly weekly of RSI of Reliance on this chart is above 60. There's a monthly, there's a weekly. Then I go to the daily and check out where they are at 40 support. So you have 1, 2, 3, 4 instances where you could have taken this 5-star trade, and all 4 of them worked well. Now, do you take this one? It depends, because it's slightly below 40. We need to take support on 40 or near 40. Now, see, the market does not know that you're following 40 RSI, so it will not come like 40 and touch and go. So you have to follow your discretion at times when 40, 41. So this is where it's support. So what you're doing is, the biggest aha moment, if you want to tell you, is you are buying a strong stock because monthly and weekly are bullish, grandfather, father. And you are buying the strong stock. Generally, people want to buy the strong stock on the breakout. Breakout means when they go above a high. And that's where they find it difficult, because false breakouts happen. It's difficult to psychologically buy a stock which is going up, because since childhood, we have been trained to buy things cheap, right? So it's difficult to do a breakout trading. And all this I've done, all the blunders and all my experience I'm talking about. So, and if you buy a stock which is going down, like stocks like Tata Motors or banking stocks, PSU banks, then you are going against the trend. So what is the middle solution, which is this, is that you want to buy a strong stock, but not at breakout, but on support. So strong stock, which is monthly and weekly above 40, 60, and at support means daily at 40 support. So both the purposes are solved, and that's why it's called a 5-star strategy. And that's why it is very, very low risk. How much is your risk? 1 candle. And how much is your potential reward? 3 to 5 candles, or sometimes 8 candles, sometimes 13 candles, right? So these are some examples. If you can see, monthly and weekly are above. So we have done the marking where monthly is above 60, weekly above 60. That means it's a 5-star zone. In this zone, then I go to the daily chart and check out where was the buy at 40 support. And that gave me a nice up move compared to a small stop loss. It may produce 1 trade, 2 trades, like again, one more. Monthly and weekly above 60, daily at 40. So monthly and weekly above 60, daily at 40, twice. Both the times the trade worked well. Sometimes it may get stopped out. That's okay. Then that's the part of game. You know the stop loss. Monthly above, weekly above, and daily at 40. See how you are buying near the support levels, and you're buying a strong stock, which is inherently strong because the grandfather and father are bullish, right? So this is 5 stars long side of it. Now we can exactly reverse the whole thing and make it into a short side of it. So how do you do the short side of that strategy? Is like monthly below 40, weekly below 40, and daily at 60 resistance, which would be an inflection point. Same, exactly mirror image on and make it opposite. That's going to be a short strategy. So grandfather is bearish, father is bearish, and son is near the point where it can turn bullish if it goes above 60, but the grandfather father will pull them down, and that's where it's going to create an inflection point, and then you'll see a bearish candle like this one. So that's your entry candle or a signal candle, or we can even call it as an alert candle, or we can call it as a trigger candle. So trigger candle, alert candle, signal candle, whatever you call it, that tells you that the trade is on. Below the low is your short. Of course, you can only short in futures, not in cash. So this you can do in futures, and below the low is your short, above the high is your stop loss. And that's the same write up for you. Monthly at 40, monthly below 40, weekly below 40, daily near 60. Signal candle, below is your entry, stop loss is your high, first target is your 40 RSI, and you can use trailing stop loss. So trailing means once you're in the money, you can trail your stop loss from the high to the next candle, next candle, next candle. So that way you protect your capital, right? So this is very, very simple. Let's see this one. The Yes Bank, everybody's favorite in the last few months, and what happened in the debacle. And many people lost money, and it's simply no sense. If you see simple tools like RSI, it was already a sell since 2018. If you see that it did not cross 60 in 2018 at the highs of 400, at least when it goes below 60, you would have got out around 300. But now let's look at this. The monthly is below 40, the weekly is below 40, and daily at 60 resistance. So even at 70 rupees, which is this, is a great short. Similar things happen in short trades like Tata Motors. Monthly below 40, weekly below 40. See, the zones are same, 2018 and 19. And then go to the daily, 1, 2, and 3. That's a short trade. That's a pretty nice short trade for you in the last, especially the last one. And you know what? Most of the strategies which I know, or most of the strategies in technical analysis work better in short trades, because the very nature of stock market is like that. That market goes up slow and steady and then comes down like a slide. Like you have seen the slide kids play with. They go all the way up on the steps. It takes like 30 seconds and then they come down in 3 seconds. So that's the way market functions. That's why we make more money, fast money, thick money, quick money in downtrends. That's why since the time 2008 crash happened, that was my life changing point. And since then I've loved crashes, and every time I would like to prefer, I definitely make sure that I make money in the crash, if not in the bull run, because that's, I think that's kind of my specialty. And my students can't be that you are a downtrend specialist. But this is what is simple it is. Downtrend specialist doesn't matter. You need to have a strategy. You need to have a proper system which can drive you, like give you guidance and give you the process. Like my favorite quote when I do seminars is I have this quote here. It says, focus on the process, not on the profit. What is your process? Do your homework on the weekend. Find out the stocks which are above 60, below 40, monthly, weekly. Check out the inflection point. Check out the risk reward ratio. Alert the candle. Put your orders at time and put the stop loss on time. And then let the market, and then do the trailing stop loss. Then let the market do the rest. If you focus on the process, then the product or the profit will be taken care automatically. But before you even get into the process and you try to jump the system, break the rules, it's not going to work. So this is very, very important. So along with the technical stuff, you really need to work a lot on the mindset also, which we do in our programs. And Meghna Malkan, my wife, she is also a high performance coach certified by Brendan Bouchard, one of the top coaches in the world, who has coached presidents and athletes and all. And the way she teaches on the mindset is completely different. We have like more than 600 videos on our YouTube channel. You can check out those videos also. So what is important is that understanding the system is one thing, then backtesting the system is second thing, and then third is implementing the system is completely a different ball game, right? But of course, understanding the system comes first. So you need to at least, now with this approach, you can at least save a lot of mistakes or a lot of blunders. That itself is a money also. The money saved is money earned. So I would strongly suggest, there are a lot of videos on RSI on my YouTube channel. You can go deeper where I maybe explain this concept along with another concept of reverse divergence, 5-star trades, 7-star trades, and a lot of stuff. So you can watch those videos. I'll tell you the link also. By now, I'm sure you are clear. It's very, very simple. Grandfather, father, son. Look, think, you know what? When we were kids, we used to like stories, and we used to like kind of analogies which are easy to remember. So you say grandfather bullish, father bullish, son will take support, inflection point, waves, higher time frame rules, all this, whatever makes it simple. Because I literally want to make it so simple that a 10 or 11-year-old can understand. My son is 11-year-old. He has attended my seminars. He knows what is 40-60. He doesn't know what is stock market, but he knows what is a bullish trend, what is a bearish trend, and what is a range shift, and when you should buy and when you should sell. That's more than enough. You don't need to go and find out why they are doing such things. So you can keep doing this back testing. Check out the stocks like Lupin, monthly below 40, weekly below 40, and then we go to the daily and see where there are resistances. Two of them, two resistance, two red candles. Again, RBL Bank. I can go on and on for this. This is like, I can do it. I do seminars for 8 hours, 3 days back to back, sometimes 4 days. And I love this. This is my life. So keep back testing. The more you see the charts, the more you back test the charts, the quicker you will be able to grasp it, and the quicker you'll see that, oh, it's a sell. Oh, it's a buy. So here, what you're doing is you are selling a weak stock at resistance, right? You're selling at a rally, right? And inherently the stock is weak. That means the grandfather and father. So this is very, very important strategy. In fact, I have covered the same strategy also in this book called #CashTag. There will be a couple of new things you will learn if you get the book called malkanbook.com. And also this, I would like to tell you more about this program where this strategy is being taught in detail, and you can have a lifetime access to this program. It's an online program. What do we teach in this one is there are 4 sessions: position trading, swing trading, futures trading, intraday trading techniques, and mindset training. So these are the 4 types of trading you can learn. And on each of them, I have two strategies. So what are those two strategies is session 1, I'll talk about 2 positional strategies. Session 2, I'll talk about 2 swing trading strategies. Session 3, I'll talk about 2 futures trading strategy. And session 4, I'm going to talk about 2 intraday trading strategy. You may not do all of them, but you can combine all of them. And the best part is, plus we are going to add mindset sessions also to this. Like some of my students, you can see lot of testimonials, like hundreds of messages like this, and making money using simple techniques. So the program flow is that all the sessions are recorded and it's going to be available right away. Program orientation plus positional trading, swing trading strategy, futures trading, intraday, 4 sessions, 2 strategy means 8 of them. Then what I did is, it's very important to understand the strategy in live market. So what I did is I'm recorded 4 live support sessions, 1 on swing, 1 on positional, 1 on futures, and 1 on intraday, to help you understand how what you have learned in the strategy can be applied in the real market. So you can go and check those dates when I did the live sessions and see what happened on those dates. Plus another 4 support sessions where I integrated all 4 strategies together and made it into one, so that you have like total 8 support sessions, 4 sessions with strategy with 8 strategies, and some extra bonuses which I'm going to announce. The value of this program can be anywhere 1,50,000, but of course it doesn't charge, we don't charge that much, but you can go and check out. What you're getting is, all this is for lifetime access. Live support sessions, mindset sessions, stock trading secrets, recorded version. So what I'll tell you what is stock trading secrets. So this 4 weeks class, lifetime access, there's a special 4 sessions on mindset recorded by me and Meghna. And then I had a special session program called Stock Trading Secrets. It's a separate program, not the blueprint, a 4-day program on basics of technical analysis, basics of candlestick, basics of momentum trading, trading mindset, risk management, and a lot more. It's like a 4-day program, total like 8 hours of training, recorded and given to your membership site. And all you have to do is go and check out this link, Malkan, what you see on the screen, the same link, you go there and you can register for the program. Now, let me give you, if you don't even join the program, I want to give you something for free, is that go to this, my Instagram, where I share a lot of videos. Recently, I did a video on trend analysis of COVID-19. Then you can join my Facebook page. More than 25,000 people are there. Official Facebook group with 13,700 people, where people keep sharing, and I do a lot of videos for the members. And of course, my YouTube channel, which has more than 600 videos. You can see the videos on ADX, videos on leap year, options, trading strategies. Tuesday Technical Talk is a show which I do regularly since 2.5 years. So you can see that they're at 125 episodes, 128 episodes. Meghna Malkan's mindset videos on Pro Trader Talks, some of our testimonial videos, like a lot of videos are there. You can watch them, and we keep adding at least 1 or 2 videos every week. And once you get into the program, you'll get a membership site like a Netflix site. You go inside the program, you have all your programs loaded. So the stock trading secret, you click on that, you'll see that there are 4 days of training. Day 1, part 1, part 2, 3, day 3, day 4. 4 days of training, basics. Like if you are completely new, this is the best thing you can get started. Let's say if you want to go to the strategies, you go to stock trading blueprints. That's the 8 strategies are already recorded here. Positional strategy 1, 2, swing strategy 1, 2, Q&A, future strategy 1, 2, intraday strategy 1, 2, and how to exit, special video on that. And you have the support sessions and the mindset sessions, which are already loaded in your membership site. And this is for lifetime access. So you can watch this whenever you want at your convenience, and make sure you do that again. So this is the link where you can go and check out the details. And these are the things where you can follow me on YouTube, Facebook group, Facebook page, Instagram, Twitter, podcast. Oh, that's another thing which you can check out. Audio, nowadays podcast is booming, and you can just listen to some of the motivational stuff, money stuff on the Malkan show by us. I hope you enjoyed this strategy, and I would like to do a quick kind of a recap for you before I get into the questions. So just look at this: monthly RSI above 60, weekly RSI above 60, and daily at 40, and inflection point alert, buy above this, stop loss below this. And then similarly on the short side, you're going to do this: monthly below 40, weekly below 40, daily at 60 resistance, and then put an inflection point, red candlestick, you short. Right? That's so simple. The more you practice, the more you see the charts, more you backtest, that much stronger will be the output, right? And also, if you want to be part of this Malkan's Stock Trading Secrets Blueprint program, I shared the details already. Go to this link and check out the details, and you'll get some amazing bonuses also there. So thank you so much. I had complete pleasure doing this webinar, and thanks for inviting me. I'm truly grateful for all the love and support and all the associations we have together, and good luck and good trading.
Well, thanks a lot, Vishal, for that. Our audience members have actually sent in a whole lot of questions for you, but due to paucity of time, we'll just take a few of them. The first question that we've got is, how will RSI help an investor during a black swan event, something which we are facing currently?
Sakshi, I think RSI, the way it is designed, is a tool which is widely popular and being used by many people, and it has multiple uses. Like I showed you the range shift and the Fiestar strategy, which is one of the things which I also teach in my programs. But if you look at, let's say when the black swan event happens, like the one, the markets will fall immediately, the RSI will react. The first reaction of RSI will come on what chart? The lowest time frame, which is a 5-minute chart, and a 15-minute chart, and an hourly chart, then daily, weekly, and monthly. So if you are a short-term trader, or even if you're a medium-term trader, the first reaction from the hourly and daily will tell you that something is wrong. Of course, there will be a damage, but you can control your damage if you take quick action, looking at the way RSI behaves in a particular way. And there will be a range shift signal, at least on the lower time frame signal, before it goes big on the higher time frame, like the weekly and monthly charts.
Okay, the next question is, at times stocks fall on certain rumors and on news, which later turns out to be false. If these stocks fall through your exit levels, even for a day, how and when does one enter again, is the question.
Okay, so if a stock gets through the exit level, like there's like a stop loss gets triggered, and the candle breaks or RSI 40 breaks, so then you are out. And then again, if it bounces, then you only get a re-entry. What I teach my students in all my programs is that the only thing in your control in this business of stock trading is your loss. You can't control what people are trading, what FIIs are trading, what DIs are telling, what mutual funds or what channels are talking about. The only thing in your control is your entry and your stop loss. So because if you enter without a stop loss, let's say there are many people who say this thing that I put a stop loss, it gets triggered and then it bounces back. And next time they don't put a stop loss and it goes down quickly. So stop loss is like an insurance thing. You have to follow the process. And then if it gets triggered and if it gets a re-entry, you can always get back in the market.
All right, then actually let's move on to the next question. How much importance should a trader give to overbought and oversold zones?
Great question, Sakshi. The overbought and oversold, as I said in the start of the webinar, that it's a very conventional approach where people use 70 and 30 as overbought, oversold. That's the conventional approach of RSI. What I have learned from the experts and discovered myself also that the oversold, overbought areas are different in different markets. So in a bullish trend, we discuss about 40-80. In a bullish trend, 40 becomes oversold and that's where you should be buying. And in a bearish trend, 60-20 is the range. 60 becomes overbought. That's where you need to sell. So this is slightly or maybe 360-degree opposite of what most people have learned or seen on videos. And this is very, very effective. So you have an overbought situation in a downtrend and you have an oversold situation in an uptrend, not vice versa.
Okay, and the next question is about your signature 5-star strategy. The question is, how can this really help us in the current markets, which is right now rallying largely on liquidity and also on hope?
Great question. Like this strategy, which I've been teaching since last 12 years, almost like 10 years, and it has been applied to all kinds of markets, be it equity, commodity, currency, even cryptocurrency, anywhere and everywhere on all time frames. So like when I use the grandfather, father, son strategy, I use monthly, weekly and daily. Similarly, you can change the time frame from weekly, daily and hourly, or you can do a daily, hourly and 15-minute, or you can do hourly, 15-minute and 5-minute. The results will be the same. The entry exit will be the same. So it will work in all the markets and you just have to follow the process. We don't know, as a technical analyst, we are not looking at anything like hope or liquidity or any news. It's just the charts which tells us in advance what people are talking about and thinking about.
Well, Vishal, we just have time for one more question, and the last one from our viewers is that Indian market hasn't really looked back after hitting a low in March. So do you think the majority of the market has actually hit a bottom along with Nifty 50? What are your views on this?
Great question, Sakshi. The fall which we had in the month of Feb and March due to COVID, and the bottom which we made around 7,500, and we had a very immediate, like a V-shaped recovery to that. That suggests that definitely the bottom is in place, right? And the way, if you look at RSI on the monthly chart and the weekly chart, they have come back above 40. In fact, on the monthly chart, the RSI has taken support on 40, which says that I'm not going anywhere again into that zone. So I'm pretty confident that the bottom is made, that every dip or can be a buy opportunity. And of course, there is no ruling out of a higher bottom. Let's say 7,500 was a bottom and we are trading around 10,500, 700 something. We can have a higher bottom in terms of 8,500 again. The only thing which can break the bottom, which can be a fresh burst of virus and like a major pandemic taking over India and everything getting shut down and closed and locked down again, that's the only possibility where we can see a fresh low. Otherwise, I think we have made the bottom for good. I've shared this on I do a show called Tuesday Technical Talk every Tuesday on YouTube, where I share my current market views since last 2.5 years. Your viewers can check my YouTube channel where there are so many videos on that.
Well, thanks a lot, Vishal, for this extremely informative and interesting presentation. I'm sure our viewers would have benefited greatly with these tips and tricks that you have shared with us. Many thanks for joining in.
Thank you, Sakshi. I think this was a great webinar and I hope your viewers love it and get the content out of it and use it for their daily trading, even weekly trading, monthly trading. I hope and looking forward to the next webinar. Thank you so much for inviting me. Have a great time. Good luck and good trading.